All right, hello. Do a quick little sound check. It looks like the bar's there, but it also looks like it's a little bit low. Let me see. Let me raise this just a little bit. I go to grab the adjuster, and it's like, oh, installing updates. It's like, no. All right, we'll see if you guys can hear me or not. It looks like you can, but like I said, it looks like it would be a bit low. Something is restarting on me real quick here. It's fine there. Okay. Yeah, maybe it's showing that it's low on mine. All right, hold on. All right. when I try to open the program. So let's see. Well, this is great. I don't know why it's installing new things now. So much for trying to adjust. Oh, come on. You can do it. You can do it. All right, hold on. This. Hold on one sec, guys. Now I got to figure out which one that is. Let's delete. Let's add source. All right, so that should be good. All right, let me know if that is working. I went to open the program to adjust the settings, and it decided that it just wanted to, do an update on that program, which is really weird. I'm like, huh? Why does it do that? I'll put it here. Device properties. Let's bring it there. So that should be better. All right. It looks like it's better on my screen. All right. Yeah, so everything should be good now. I think everything is fine. The red's where it's supposed to be. Nothing else is updating, thankfully. Yeah, I got it. I don't need to do it in here. Microphone, that's good. That's good. Okay. Woo! I think we got it. All right, we're good. All right, guys and girls. So, last 24 hours. Some interesting movement back and forth. It seems like we are flip-flopping all over the place. One consistent thing, though, we saw is European weakness from yesterday into today. Euro Swiss is about the one thing that is really kind of, outstanding there as far as showing weakness. And again, it's because we don't see a lot in the news. But right now, in the last 24 hours, we can see that more or less the euro has been flat, although, again, in the last 4 hours, we're seeing, really since the European Open, seeing it push back down again. Pound is up again, right? We got a little bit more pound strength, even though we are seeing a bit of a retrace this morning in the last 4 hours versus most pairs. Dollar yen, down 18, nothing. Dollar Swiss up 3 is nothing. Dollar CAD minus 37 is that CAD continuing to grind a bit lower. Aussie dollar, again, up 42 is actually pretty decent, and there was news last night for that. Gave us some, decent run up, right? I mean, there were some pullbacks into some areas that you could have definitely grabbed. I think that was the hourly setup is what I had that one on. Yeah, some of the hourly setups for that one last night ended up pushing forward, as well as the Aussie yen. And then euro pound, again, continued European weakness and pound strength. So again, it's nice to see this thing kind of rolling a bit. Question is how much farther can it go? I mean, that's really the big, the big question, right? I'm curious about this as well because, without any news and things like that, I feel like we're due for a reversal. I just feel like we're starting to get a bit extended on this one. I mean, I think overall it definitely has more room to run. I think the pound being, what it is, I think has a more upside potential than the euro in itself. Unless like basically next week we come out with a vaccine and nobody ever talks about COVID ever again, then obviously the European Union will have a little bit more of an advantage because more country states in recovery. But I don't know, but I'm not sure about that one. But I still feel like the pound's got a little bit more oomph in it. And again, Jackson Hole may help with that a bit. All right, so today, right, we have preliminary GDP numbers quarter over quarter. Now, as I mentioned earlier in the week, this one doesn't really necessarily matter as much. It's a great news headline. Oh my God, look at this. Trump's driving the economy into the ground. It's like, no, this is COVID. Every nation in the world, I think 250 nations have it. Trump only runs one of those. All their economies are much, much lower. Now, preliminary GDP number quarter over quarter is such a big thing. And I mean, COVID is one of those things that every single day we're talking about it. What are the new cases, hospitalizations, death? I mean, it's literally dissected into like the hour, right? A quarter over quarter number is quite a large number. So, is it what's happening right now? No, it's what, where we are now compared to where we were a couple months ago, which really is back data. So it's not as important right now. Unemployment claims, though, I think is something that we need to watch out for. I don't know if we'll be over a mil again. I think it's funny that they just decided to pick a mil. Like, we're going to pick a mil exactly, because I just don't think that they have any clue either what it's going to be going into this. I think we will see a bit of an uptick once we hit September. Once kids are going back to school, I think parents are going to realize that they just can't, they need to be home, right? They have justification for, basically we're going to have to virtual school. Colleges are starting to shut down. I saw that Ohio State yesterday suspended 228 kids for violating the COVID precautions thing or whatever. I have a feeling this is going to be a trend. And that more and more parents are going to have to, basically go home and file for unemployment if they don't have, remote working jobs. So I think we will have an uptick in that one. I don't know if we're there yet. It may be a little bit early. I think people will work until they can't. And then we have Powell speaking at 9, and I think that's where the big fireworks are going to come this morning. Pending home sales, not worried about at all. I think whatever Powell says is really going to be the kind of the kicker of the morning, right? Macklin speaking at 11:15 will probably provide some movement, especially in the CAD yen for you currency traders. That typically is one of those pairs that's where we'll see the movement, right? That's where we'll see the movement. So until that time, we'll see what else. Again, I think all eyes are going to be focusing on what Powell says and then dissecting what Powell says, because again, that's one of those guys that when he talks, he can move the market. And it's funny because as an individual, in controlling the market, he has a lot of power. But at the same time, people don't always. The market will listen, but people don't always listen. I remember. You guys remember in the housing bubble, right? I mean, like, we had the president saying it's a good time to buy stocks, and nobody trusted him, right? Buffett was saying it's a great time to buy stocks. Nobody trusted him, and that was like literally the bottom of the market. It's like when those two guys are telling you it's a good time to buy stocks, it's probably a good time to buy stocks, right? There are certain people in the markets that have the power to really change the environment, right? Powell is one of those guys. So, again, we may get some fireworks today. And again, being day one of Jackson Hole as well, I don't think we'll get too many headlines today. I think tomorrow is going to be the headline day for Jackson Hole. And again, I do, if you guys don't know what Jackson Hole is, again, you guys can look at it over here. And and it's funny, they're like, why Jackson Hole, Wyoming? But you guys will be able to read it all. Again, there's a lot of stuff that comes out of it, a lot of comments, a lot of opinions. And again, this is the important thing. The meetings are closed to the press, right? But then you can see right here, but officials usually talk to reporters throughout the day, right? It's those comments that really kind of jack things around, okay? So we got to look for that. And then going into tomorrow, there is a little bit of early morning news again in the Swiss. We mentioned this earlier in the week. We very rarely ever get Swiss news, but we have this economic barometer. It's like, what? What? Swiss news? Again, we don't ever have it, which gives us a great opportunity for dollar Swiss, right? Or even Swiss yen. If you currency traders out there, Swiss yen is also another viable, trade for this one. Followed by, again, CAD GDP month over month, I think is much more important. Obviously, it's going back up because, again, we're not in the doldrums at this point of COVID. So, again, we will see that moving higher. Spending and price indexes are also going to be important. Bailey speaking at 9:05 should also give us some pound movement. Chicago PMI, it'll be all right. Again, it's above, as long as it's above 51, we're fine. Consumer sentiment, I'd like to see it go above 72.8. I don't know that it will. I think it'll actually be lower this week based off the CB number that we saw earlier on Monday. And then tomorrow, Jackson Hole, that's going to be where we get a lot of comments, quotes, and talks to reporters. So I think that tomorrow afternoon, I think, should be pretty interesting. My goal is to be done, get my prop, pips for the day, and be out. Probably, hopefully before the 10 o'clock number. Again, I want to be out and done. I don't want to mess with any of the Jackson Hole stuff. It's just, it's one of those things that we know it's coming, we know it's there. Do you want to mess with it? And the question is, probably not. Right? It could be definitely some volatile trading in the afternoon. Hopefully it's all positive. I think it would be great if we get that end of week rally, closing Friday on a green. That happens many times. I think tomorrow's the ideal setup for that situation. NQ, have that thing punching even higher to new highs, and maybe have the S&P catch up as well. Dow, we'll see. I don't know if Dow has the oomph yet, but it would be nice to see those two indices punch even higher. And it's funny, the higher these things go, the more they can fall next year. And I kind of want them to go higher, right? I want them to be a rocket ship. I want them to go so far up that it's like, oh my God, this is a great bubble. Because I am all about hitting the sell button. I am totally cool with that. I would love to do it. And when this thing crashes, it's like, woo, it'll go quick. And there'll be so much money to be made in there. So, yeah, I'm good with that one. So punch these two higher, go Jackson Hole. But a lot of that will come in tomorrow. Again, we'll talk about that tomorrow morning. All right. As far as news goes, you're talking about, Aussie dollars hovering around 8-month highs. Again, that's kind of a big thing as well. After all this buildup, could Powell be anticlimactic? Sure, he could. Absolutely. I mean, economics boring. I mean, it could definitely happen, but it also could be kind of crazy. Inflation targeting, not a problem for central banks. Again, that's pretty interesting. Will he meet Dover's expectations? Yeah, maybe. He's Fed expected to use Panama tool. Jeff Bezos, I'm the first $200 billion man. Yeah. Again, he maybe Jeff Bezos is behind coronavirus. New Zealand Stock Exchange halted for third day. There you go. Look at this. Third day in a row following offshore cyber attacks. Never a good thing. Fed engineered risk rally. That's interesting too with Morgan Stanley. So, nothing crazy. Again, a lot of this is all speculation in here. Kind of talking about, are they going to use tools? Again, a lot of this, as you guys can see, is focused around Jackson Hole. Obviously not the cyber attack and Bezos patting himself on the back. But again, the pandemic has been worked quite well for Amazon, right? So it makes sense why we're there. It's kind of the same reason, like years ago, we saw, Exxon, the Exxon heads patting themselves on the back because they had made record profits in the middle of a recession. Yeah, it's because they jacked the price of, oil, and, gas was $4 a gallon. So, again, taking advantage of things, he'll be the, is what it is. He was in the perfect situation, All right, so that's all we got. Let's just dive over. Let me go to Scanner real quick. So Scanner, as I mentioned before, still seeing that European weakness, and most of that is coming from this morning. We're seeing that Aussie strength come back in again, and we're seeing some pound weakness now. Again, yesterday we had pound strength. We're seeing a bit of pound weakness, but it's interesting seeing pound weakness, and seeing European weakness, all in the, on the kind of same scanner, right? When you see both, you're like, what's going on? How is everybody weak? Why is there so much red up here all at one time, except the Aussie? It happens. Like I said, all eyes are kind of focused on a few select individuals right now. All right, so let's dive across. Let's go into charts. What is that doing? Oh, you know what? Hold on. Let me add this real quick. Audio. There we go. All right, so you should be able to hear me. Yeah, I forgot. It's going to do it on the last one, too. Anytime there's talking, I'm going to have to re-add that device. Oh, the fun of streaming. And I still need to switch over and change the streaming ticket, too, or change the platform. I'm about like 75% of the way, but I had to finish up those 2 slide decks. And I really need to finish that this week or next week. Switch over to the new program. All right. Anyway, we can see that we had Australian data last night. The Australian data last night overall was good, right? Capital, expenditures, they're expected to be, minus 8.2. They're only minus 5.9. And it's kind of one of those, yeah, they're great. I mean, it's still negative, but it's not as bad as what we thought. And that's what was able to drive us a bit higher on this one. And you can see on an hourly, we didn't quite get up to where we wanted to. We had mentioned that there wasn't really tons in here. We had a little area. And again, you guys can see it bounce. Number 4 is really what kind of punched through. Again, expected punch through the top. There was a couple different trade setups here yesterday. But looking higher, we had a small level here that we had mentioned and said, hey, listen, actually, I'll just move this guy up. We don't need him anymore. We said that, hey, listen, there's a small piece right here, right? But ideally, it wasn't really the best situation. You can see what the reaction of the price was, right? It came up, it kind of based sideways, pulled up, came right back down again. What we were really waiting for in this one was this thing to come up to 72.67. And it made an attempt. It made an attempt, but it didn't quite get up there. Instead, what we saw was kind of a really big punch forward and kind of a retrace back down again. So with everything, that we're seeing, talking about Aussie dollar being at highs and, things like that, I do think we are probably due for somewhat of a reversal today. I think the comments and things tomorrow will probably help drive this one a bit more, but I'd still like to wait till we got a bit higher. On 30-minute levels, you can see, where this spike ran into. It kind of ran into a level here. It wasn't one that I'd be interested in taking. Like I said, 72.67 was what I wanted. And we got pretty close. We just were unable to get that full kind of punch up. And then again, it rolled over. And again, you guys can see here is the 8 o'clock where we are right now, and this spike occurred at about 2:30 in the morning, right? The initial kind of zone here was formed last night to the top side, and again, impulse correction, impulse move, and now it's kind of switched and is retracing back down again to the origin of the move. So, you know, I don't know. I'm kind of hoping that the 8:30 number today gives us some type of, or not, sorry. Yeah, I'm hoping that the GDP and the employment claims gives us a bit of a spike. I would like to get short in this zone. I think that's probably the best kind of near term kind of entry for things. I'm cool with where the 1 to 3 is. The 1 to 5, I think, is a bit deep. There's 2 levels in there if we have one candle straight up. But for me right now, that's kind of the best if this, then that strategy, right, for the Aussie dollar. Now, if we can get a spike up on that for all the way up, that would be great. If Powell says something and spikes us up, again, I will probably wait for a confirmation entry to the downside. Again, Powell could say one thing, the spike us up, and then he could pause for a bit and talk about other stuff, and then come back to it and cause another spike in there, in which case we need to go a bit higher. But wait, if we hit the zone, again, it's great for Nadex because we have that limited risk put in there when we get in. And again, this would be a great 9 to 11 binary, right, to be able to target Trump. If we can pop into that area now, that would be kind of good, right? Again, ahead of news, you can get something pretty cheap in there. But again, if Powell's jumping up, him speaking at 9:30 or 9:15, or sorry, 9:10, you're still probably good for a 9 to 11 binary this morning to be able to kind of take advantage of something that he says smaller. And that will also include pending home sales. Okay. Looking at Aussie yen. So Aussie yen. For the most part, this one was pretty boring yesterday. You can see we had this like little kind of cap here, and we talked about it. I mean, we had punched this level many times, and we said, yeah, there's probably something small there, but look at this. Absolutely no movement, no reason to even have a trade in there. We were hoping for a spike down and be able to take a short, and didn't really get it. Got a push, kind of the same push that we had before, going a bit higher, right? The same push that we had going higher. With price now at 76.90, it's kind of like, there's nothing really kind of sticking out on the top side. Bottom, I mean, it looks like there could be something there for a long, but this is where we're currently sitting, right? We have orders and kind of things up here, and I think these are those dailies? No, they're not dailies. I forget. I think these are just refined levels that we used from before. We have levels here at 77.17. We're about 30 pips away right now. I think that's where we're probably going to be looking to get short right here. I'll change the colors on it so it makes it a little bit easier for you guys to see. Go to the red there. Right there is where our 1 is. And again, this one should be there. Okay. And these are, let's see. These are from way back. Let's see. I don't even know if I can see it on this chart. Let's see. Yeah, from here. Let's see if I can do this right. There's a science to this. That was good. That was good. Can I do it one more time? Yep. All right, so you guys can see where the 2 levels are. Let me move this out of the way so you guys can see it. All right, we're going to do it over here. So here's a level of basing. That first of the 2 zones is a level that we had a decent drop into, a base sideways, and then an explosion out the bottom, and it was retested one time. All right, so we know that we have some sellers that have stepped in here in the past. The second one is actually a gap candle. Again, it gapped all the way down, rallied up, hit it, and then again got hammered and started that move. So that's where the 2 zones are actually forming. And that's what's sitting right above where we are. So I'm actually happy with both of those. I'm kind of hoping we can get up into there. I love being able to take 4-hour levels. The risk is not huge on either of those two. But for, again, 77.17 and 77.90 are 2 topside entries I'm looking to get short in. And right now we are about 30 pips lower here at 76.90. All right, so keep that on the radar for Aussie yen. And again, it should be able to hit that today. And going into tomorrow, I'd be really happy with that. I think that would be a great kind of way to go into Jackson Hole day 2. Would be a short off that level. Now Euro yen, not much, right? Not much. Here's where we are at 8:30 right now, with price being right here, right at 25.27. Yesterday we were sitting right here at the same price. We had a little bit of up, we had a little bit of down, but for the most part, we're only talking about being about 12 pips different, right? And we even mentioned this a little bit yesterday. I mean, here's kind of where the basing level started, right? We've seen price hit here and hit here again, and it went deeper, right? So we do not expect this one to hold next time. And that was the push. I mean, we were talking yesterday about how we were kind of, right there. Yeah. We were talking about kind of retracing this entire amount back down to 2503. We had this as a low down here at, let's see, 25.15. So again, we were within about 10 pips of this to the downside. I do think this will continue to push lower today. I do think we will finally get out of this short area. But it's been pretty decent. I mean, it's been slow. It's been kind of bouncing back and forth. We've gotten a few entries into this. And again, once we broke this level in here, that's where our short entry was. And I think we even talked about it yesterday. And we're a bit lower and we got one more piece in. So I would say, again, the 125.03 is a target for later on today. But I would not be taking anything long off that area. I think 124.77 is still kind of an area that I'm focused on. And I'd be willing to take this here. I'm sorry, this one right here. I'd be willing to take this one long, but not necessarily here. It's more of a profit target for me. Okay. Now, pound yen. So pound yen, look at this. So here's where we're sitting right now. Yesterday we were sitting right here, right here. And we talked about this level. And it was kind of like, hey, listen, if we finally can break below 139.55, we're willing to take this. Now, we may hit it again and it may go higher. And that's exactly what it did. Parabolic retracement trade. Right, this thing took off at about 10 o'clock in the morning. Actually, it took off about 9:30, and you guys can see right here, 10:30 is where the reversal kicked in. Back to the downside. It had a pretty quick retrace and then kind of just stabilized and went back off the top level. It has retraced fully now in the last hour and a half. We're still holding the same idea here, this 39.55. If we can break it, look for a pull down, look for a retrace, and a pop down. So this is a perfect example of why we need to stay flexible. We have a short trade ready to go as soon as the if this then that, or as soon as our our parameters are met. But again, that's why we need to have multiple arrows in our quiver. Here's a parabolic move that rallied up about, what are we talking, 55 pips? That's an easy retrace play back to the origin of the move, and you guys can see it came all the way back again. So again, you guys should have grabbed this one. This definitely should have been an easy grab on it. It did exactly what the parabolic retracement strategy does. Right now, again, it looks like it's having a hard time going a bit higher, right? Again, we're running into some issues right now. I would still hold the same Harry Potter here. Again, if it comes back down again and hits and bounces, great, no harm, no foul. Our entry has not been met, but it's a trade that we have sitting in the wings ready to go once price is able to collapse through that level. And the goal is to take this green area that we had a nice kind of punch up through on the hourly, right? This bit right here. Okay. But as you can see, we had that new high from the spike. And again, we've had the lower high here, and now we're pushing back down again. So still waiting for a collapse, and actually of this green level. So we can probably change this around a bit and actually use the green level if you wanted. The risk is going to be exactly the same, but most likely it'll come down and tag somewhere in this 139.55 and then pull back up to the green level. So it could end up looking more like this off of that level. Again, using this kind of basing here versus the lower base, and either one would be fine. But I do think price will come down to 139.55. And again, we're looking for a drop, a base, a pullback up, grab that level or this level, and then collapse through the bottom. And really, the targets are basically in the same situation. It's just what level of risk do you want to take? You want to be a little bit more aggressive or a little bit more conservative in those two shorts. Okay? Over there. All right, let's talk about pound dollar. So, pound dollar. Whew, look at this thing right here. Okay? Here's where we are right now. Again, this is the hourly. Here's where we were yesterday. So we're in a zone, and we took a nice little bounce off of this, right? This one continued to push higher and didn't quite make it. I mentioned yesterday that, again, we've been rallying from really this top to bottom, top to bottom, top to bottom. We talked about it here on the 4 hour. You can see bottom side, top side, bottom side, top side, bottom side, almost top side, right? Almost top side. So, and that's what we were waiting for. We were waiting for this to come up to 32.41, and it made a temp, right? Impulse correction, impulse correction, impulse higher correction, impulse higher correction, and now it's starting to roll on us. So kind of the same thing we saw on the Aussie. It got close, but we just didn't get up to the level we needed to get up to. Right now, I feel like this morning we do have the potential to go back up to that level. Between the unemployment claims, the GDP number, which will be out in 3 minutes, and then Powell speaking, I do feel, again, there will be enough potential dollar weakness that we may, run up into those areas. And again, 132.41 is kind of the beginning of the area, and the end of that area is up here at 33.66. So it's kind of like a 20 pip zone. Excuse me. I know you guys can hear my voice today. Remember how like the big drama with the wood chips? I haven't gotten them all kind of out yet, but yesterday when I was shoveling them, they there's like almost kind of like a fungus in them, I guess, because they're chipped and they're wet and stuff like that. I don't do great anyway with like molds, but God, I like inhaled it. I was dying last night, so I do apologize for the clearing of the throat. But anyway, I think this 20 pip range, if we can pop into that area, wait for a confirmation, right? Wait for a confirmation, something like this, right? Where we have a red, a green pullback that does not go as high as the red. And then as soon as we break through the bottom side of that, that would be our entry. So I would wait for a confirmation short on this one. I'd be very surprised if Powell said something that, just absolutely just explodes the dollar with strength to the downside, in which case we're very, very high on the curve. I like shorts, but again, we're kind of approaching the point here where we're in the middle. I think at 30.59 would be a much better place for us to get long this position. So if we come up, grab it here for a short. If it comes down, grab it long. Okay. Euro pound. Look at that. I try to do some yard work and I pay for it for like a day. So here's where we are now. We were sitting right here yesterday, like right in this candle. So we've had about a total of 20 pips movement, but there's no nothing. And you can see this is an area we were watching out for. Here's that 89.51. Here is that. And you can see we're just kind of pushing sideways. Question is, do we have a short out of here? Yeah, we're still dealing with this. So we're still dealing with the 4-hour demand zone. And again, that's why we're bouncing and grinding through. So it's got to do a bit more grinding through this level before I'd be willing to take it short. If we can break it here on the 4-hour, you can see that we got a pretty nice level of clearance here to the downside. That's going to be a break of 89.32 would be the bottom side of that level. I'll bring it to this side. 89, what did I say? 89.32. Right there. Oh my God, I just can't win with this one. I didn't want to put it in the view, but I guess I'm going to have to. Right there. So that's what we're looking for a break of. Would be this line right here. Okay. Once we get a break of that, we know that if we get a little bit more push at base and a pullback, again, there'll be an entry there to take this one short for Harry Potter. And again, that'll be based off the 4-hour, looking to take this about 50 pip range from here down to this level. Okay. That'll be the next setup for this one on the downside. Okay. And that'll probably look something like that. Maybe a bit far on that one. Probably that. Let me see. It's probably okay. Probably something like that in there. Most likely when that breaks through. Again, look for a break of 89.32. Wait for it to kind of space. Again, draw that triangle if you need to. Wait for a pullback. Get entered on that one. And then there's your risk level to the downside. All right. All right, euro dollar. So here's where we're sitting right now, 8 o'clock or 9 o'clock actually hour. We were sitting right here yesterday. Okay, right here on the 30-minute. And again, we took a bounce off this lower level that we had mentioned before. We'd actually set up a short position saying, hey, listen, if we can break through, look for a short. It didn't break through. It went higher again. But we mentioned, hey, listen, this is high on the curve. We're looking for short entries. But what it did do is it rallied back up to the same yellow entry point here, gave us an entry, and ended up dropping all the way through. So, I'd be very cautious at this point. We've hit this thing 1, 2, 3, and this was number 4, and it held. Number 5, I would not be messing with this for another short. I would be waiting for 18.65. But I would still continue to hold and be ready to take this short position here to the downside. Now, it's painted off a big area, which is fine. And in fact, it actually drove through, but it never gave us the proper basing level on this one. So I would say that we are probably still good for one more hit of this level to the downside. Wait for it to punch through, pull back up at, let's see, that's 1778. Okay. Now, this is a small kind of 30-minute level. Let me see what the unemployment number came in. It's mixed. Okay, so here we're a little bit mixed on the data. Preliminary GDP was not as bad as expected. Again, it's still a bad number, but not as bad as expected. And this is slightly higher. I mean, it's kind of like, it's basically right there. I mean, they paint it red, but it's like, it's just slightly over. Like I said, rounding error is what it is. This is the exact, that was the round. So I think it was pretty much what was expected. At this point, they're going to wait till, Powell speaks. That's not enough to change the trajectory of the market in any kind of super crazy way. But I do I do believe there is still a short position down here, looking for a break of 1779 down to probably 25 pips down to the down there, maybe even a little bit farther. Yeah, I think we could probably hit just a bit farther on that one also. A break of that zone. But again, this one last night, again, there was about another 25, 30 pip runner to the downside. In fact, actually, this one actually ran 44 before it ended up kind of retracing on us. And again, that same level we talked about before, it had been tested, pushed, and then again, tested, and then this is the fourth hit. Okay, so 1, 2, 3, 4. So again, number 5, I have no interest in this one. I'd be looking for sales up at 1865. Dollar CAD. So dollar CAD just being grindy again. 31.42 was an area we mentioned yesterday. As you can see, we've been kind of top to bottom. We've been stuck in a 25 pip zone on this one. Not too much movement. It's down 50 pips in the last 24 hours, and a lot of that has to do with the fact that here's where we are now, and then we were sitting right around here last night or yesterday when we talked about it. So it has this big drop. So in basically 1 hour, that 24-hour pip change is going to go from minus 50 to basically 0, right? If we don't have any movement in the next. What color was the mold? It was white, actually. It was white. It's called like it's what mulch gets. I think it's called like mulch slime or something like that. It's common in mulch. It's just it's just normal wood chips. So it wasn't like black mold. Like I don't think I'm going to keel over today. But yeah, it's like a white grayish. It's wood. It's what happens when wood chip. Once it's spread, it's fine. My kids were out there with me too, and they are totally fine. I have asthma, so I think that's I have asthma and I'm allergic to mold, so I think that's kind of what's been messing with me today. But thank you for asking, I appreciate it. So this is where we're at. Dollar CAD. Again, we've been messing around, flirting around, but no real movement. I still think this one has more room to run to the downside. I still think I'm holding for 30.67. Once we get 30.67, then I am more interested in kind of a true bounce area. But right now, this chopping back and forth into levels, again, just not tons there. Just not a lot of clean entries, but definitely bearish still, waiting for 30.67. So keep that one on your radar. The 30.67 area too is actually drawn on a 4-hour. So I'm a big fan of that level, and I think that's going to offer us a nice little bounce when it comes there. Dollar Swiss. Look at that. So dollar Swiss just missed that entry point. Again, you can see we're here at 8, right? If we go back, we can see that this time yesterday we're sitting right here. Okay. And what do we get? We got the entry at, right when we were looking for it, right? Right at that 9 o'clock window. We just touched, and then again, it is retraced fully all the way back to the opposing zone. So if you guys got this one, this was worth 20 for the first one, 33 for the second, and if you wrote it all the way back to the level, it was worth about 47 pips on the Swiss. Nice little setup. We just missed that entry again, though. You guys can see that it kind of just missed and kind of rolled on us. Unfortunately, now it's about 17 pips down. And even so, even if you took the long off this morning, again, that 90.65, that's exactly where we came down to. 90.60, what is it? The very bottom here was 90.66. So again, that was the level we were looking for, that we'd seen buyers step in. And that's again, you could have taken, I didn't take a long, I was asleep during this time period. This one kicked in at about 4 o'clock in the morning, but nice little bounce off of it. This top zone, again, this is probably what we consider the hit for it. Maybe Powell can, if he doesn't say anything too earth shattering, maybe he can bring us back up to it. But I think either of those two levels, the 91.19 or the 91.32, either of those two are probably valid for short again. And again, looking for a similar reaction off of what we had yesterday, right? That same level, and kind of retrace back to the downside. I actually didn't expect this fast of a move off the bottom. Again, it's a valid zone. We had a great explosion off of here. Front run here and a nice move here. I didn't expect this move after we saw this kind of having many major issues here, right? Little pop, little pop, little pop, kind of a bigger spike, and then all of a sudden, boom, it was off to the races. So I didn't expect this. Excuse me. But I do think this one will roll over, and I do think we will probably end up later on today at the 90.65 range. I do think it will retrace back down and test this one lower. I am looking for, probably not today, but maybe into tomorrow, a retracement of something along those lines. And again, probably holding this one for the 1 to 5 to the downside. And that's a break of 90.58 down into this 90.22 area. And that's kind of on my radar for tomorrow morning. Maybe tonight. But most likely tomorrow morning is what I'm looking for in that dollar Swiss. Looking for a short, for a retrace down, an eventual break of this level, and maybe it'll bounce one more time. But when this thing breaks, I'm all in to short this and bring it back down to the origin of this move. All right. So dollar yen. Dollar yen. So here's our old kind of level of interest, right? This was our long target again. Bounce, bounce, bounce. Broke on 4. Used it as a buying area. Went higher. As you can see, we came back down and it kind of rode along the top. You guys can see right here. It's kind of riding along the top, which typically signifies that it's most likely going to break through and not use it as a bounce. And it did. It broke through. It kind of grabbed the other side and kind of went through. It's pushing back up. Where this one is, I really don't like much on this one. I mentioned yesterday, I just really wasn't kind of impressed with this one. There's nothing really super clean in this one to really get long or short. I can extend this bottom yellow one across, right? We can bring it all the way across here. And again, it coincides with this other level that is tested now. But really, this level here, not really interested. This area of interest coming across, it's kind of like, top, bottom, based along the bottom. Here we go. And then we became bottom and then bottom again. I think to stay conservative on this one. I really feel at this point I'm waiting for 106. I needed to move to one of the two kind of extremes here. I needed to move here to 105.72, or I needed to move up here to the 106.50 range. I just don't. I'm on the 30-minute right now, and there's really no clean levels. There's a gigantic zone here, which I'm not interested in. This is kind of a retest level here, but I'd much rather, being this close, I'd much rather wait for the 105.72. So dollar yen, I'm kind of in a holding pattern, right? I need to hit one of those two levels, and we're right smack dead in the middle at this point. So come on, pal, make this thing move, right? Give me some type of hawkish or dovish extreme and spike me up or down. Until that time, I don't have much, right? Looking at NQ. So NQ, guys, you can see yesterday we were talking about, here's where we are now. Yesterday we were talking about this was probably the entry, right? We pulled back into this green zone, that kind of Harry Potter, right? We're looking for an extension higher. And I said yesterday we should end up kind of at all-time highs, right? And that's exactly what happened. Now we're kind of basing sideways. And again, I think they're waiting for Powell to speak. And again, all eyes will probably be starting to turn towards Jackson Hole kind of talks. Obviously, the preliminary GDP number helps, but the unemployment claim numbers didn't really help the overall market for this one. So, what I would say is kind of the same thing we did here. Finding this top for an entry higher is probably what we need to do as well over here somewhere. But right now, we just really don't. And again, I'll zoom in so we can get a little bit better look at those candles. Right now, we really don't have this was a very clean piece here. We don't really have it right now. I wouldn't say that. This is. I don't know. I guess we could kind of use that. It's not my favorite of zones right now. But it would be something along those lines, a bit higher. Probably shooting for 12.098. But it's not really the best. If anything right now, I would say it looks more like it wants to continue to roll down. Right now, like I said, Powell is speaking in 30 minutes, right? I would not touch this one right now. If you really wanted to get into something right now, I would have to say that a Nadex, and again, I don't even know how much premium. I don't have the Nadex platform up right now, but I would have to say, depending on how much premium's in this right now, where it is, I would say I'd probably take something maybe a little bit farther out of the money short, right, in this one. Because again, I don't know that Powell's going to be all rosy about how great the economy is right now. Again, he will mention things like stimulus and supporting companies and, like I said, I don't think he's going to be super high on the market about how great the economy is today. So, again, that negative intonation may roll us down, and this is a big jump in one day. So, probably an out of the money binary shooting for something like over in here is probably not bad. But again, I'm waiting for more of a good, nice defined top so I can put an extension on it to the top side. Because I do think this one will continue to move higher. I think this is, with everybody going remote and kids at home virtually. I think once you start even seeing some of the earnings of some of these companies, I just think this thing is going to continue to fly. I just don't see much reason to start shorting at least the NQ right to the top side. But again, right now on a technical level, remove that fact that it's NQ, remove the fact that Powell is speaking. I definitely feel that this is the way that this is hitting and then hitting again and then hitting again and having issues kind of going through. Yeah, it's consolidating, but I feel like this could, definitely spike us down before going higher again. Okay, S&P. So S&P, unfortunately, we drew the triangle for that continuation pattern, right? We were looking for the S&P to also get up into all-time highs yesterday. Well, guess what didn't happen? It did not give us the pullback that we wanted. We were waiting for a push above, a pullback, and then a push higher. Guess what? It left without us. Did kind of the same thing we just talked about on the NQ. Again, we had that top that we were putting in there. We were looking for it to punch above, and yes, it did, and hit here and hit here and hit here, and then just went whoop all the way up to my profit target. So missed opportunity. Again, if you had taken it with a binary, you're probably okay for yesterday. This top is okay. It may be worth it. Bring it up to an hourly, see if we can get a little bit better. Not really. I mean, it's okay here. Let me zoom in real quick. Let's see here. No, I went on that candle. Stay right there. So probably, again, I'd like to see the push higher, but probably something along those lines. If we can get the punch up and retrace. Like I said, the key to this strategy is it needs to punch through, pull back, and then go. When it goes straight up, it's kind of like, you're just hoping that, the wind picks up, right? We kind of want to pull above, again, breaking these prior selling, breaking the prior sellers and then punching higher, right? So kind of looking at that. But it's kind of the same idea. The way that it's sitting right now, it looks like it's more on a technical level, set up to drop back to the downside. And again, here is that last punch through. I would put targets down over here. Rectangle properties. I'm going to change this white because this is just an area that we're focused on, not necessarily a takeoff point. That's kind of what I would expect to see on a purely technical level. Okay. Powell says something negative. I can see this coming back down, right? Coming back down. But where it is and all the momentum that we have and everything with stimulus and everything else, I think that, again, I'm more interested in waiting for this to kind of punch forward, pull back. And again, this is going to be like kind of it's a bull trap, right? Everybody is, it's basically playing against support and resistance traders. It breaks above, they all buy, it pulls back, they have to sell their hits their stop losses, and then it punches forward. That's what I'm looking for higher. But if Powell screws today up, again, expect this thing to come down to 34.47. The Dow. So look at the excitement in the Dow. Woo! Here's where we are now. Here's where we were yesterday at the same time. Right here. Okay. Right here. All we did was touch that same level. We came up and based off of it, kind of punched down, based in it again, kind of floated around it. And we're still in that same level right now. 28.45 is still an area where I'd be willing to take shorts. Downside, again, I think we need to watch out for this level in here. It's not the cleanest of levels, but it's definitely a level that, again, we've seen kind of a punch here, and then it touched and took off. So I do think that the 28.092 area is something that we need to watch out for. I'm actually going to pull, oops, not that. This, I want that, I want that. I don't need either of these two right now. Just keep this clean, and we'll keep that top side one right there. Let's pull this guy off as well. We got that one marked there. This one is still down here. I don't need this white anymore. All right. So we're good. All right. So kind of the same idea. And again, on a 4-hour as well as a daily, you can see we are not at all-time highs in the Dow. It is lagging. Again, not necessarily surprising that tech has the advantage here. So, for me right now, as you guys can see, this one is kind of bracketed off. We're kind of sitting in the middle, right? But 28,485, I think, is a good area for us to be looking to get short. And I may even, shrink that a little bit. I mean, we could probably pull that one up in here, right? Maybe in the 28,470-ish range could be a good entry for us, as well as 28,092. Remember, my numbers are a little bit off, and actually this one should be like here, right? So this would be just a slight bit lower, so probably about 28,085. Remember, ECN based data is not exactly to what the exchanges or the futures market is. Again, you got to make sure that you adjust accordingly, but draw that zone off the bottom of this red body, I think, is probably the best idea. This one will be off the green, but I would actually, this indicator drawn. I may actually, I think a way to kind of shrink the risk on this a little bit is put it here based off of this green body. I'll zoom so you guys can see it. See this green body right here? This is where the zone was formed, right? But use it off of this level right here as kind of a refined risk. So kind of bringing it down into the 28,470-ish range, maybe a little bit better of a, lower risk, but a little bit better of an entry. Right now, we're smack in the middle, so we'll see if Powell can jump us up or down and give us a little hand on that one. So gold, look at gold. Gold finally punched. So we had a short. We were hoping that we would get a punch through and a pullback, and we didn't. It took off at 9 o'clock yesterday. Again, that was the that was yesterday, kind of the reaction to the durable goods orders. I mean, it started by pushing down, and we're like, yep, push below, give us the spacing, and drop, and we didn't. It ended up punching back up, stabilizing in this level. We were looking for shorts at 1964. It actually didn't even make it up that high. I mean, all the momentum kind of faltered, and it kind of just rolled back over. So right now, Powell will definitely mention the inflation word. He may mention the stimulus word as well, even though he's not really the one doing the stimulus. But he will definitely mention inflation. So it doesn't matter what he says about inflation. I mean, if he says we're not seeing inflation yet, that will probably hurt gold pretty bad. But as soon as people hear that I word, expect to get a jump. So I wouldn't be surprised if we pop up into this range today because of something Powell says, unless it's the inflation is, concerns are not there, or we're going to control inflation, or we're going to watch inflation, or we're, things like we're not worried about inflation. We're not seeing inflation, those kinds of things. That would all be bad for gold, in which case, again, yesterday's short comes back on the radar. A break below 1906. A base below it, a pull back up again. Again, remember, we want to see space. This just kind of spiked down in one candle. That is not the entry, right? The entry is dropping below, basing at least in a candle before pulling back up again. A spike down and spike up is not what the trigger is to get into this short. But if we do get that drop below, and again, that's why I draw the triangle symbol, right? It's a drop below. And again, if price can go around that triangle, meaning that it goes down and bases a candle and comes back up again, that is the correct entry that we're looking for in the Harry Potter. And that would be the drop back down to the, 1885-ish range, if we can get there. But anyway, Powell will definitely have the ability to kind of hit top or bottom. If he says it and it just goes sideways, I'd be really, really surprised. Based off a purely technical level right now, to me, it looks more like what it wants to roll, right? We got highs in, we got a lower high here, and we're pushing lower, lower, lower. So we are technically right now inside of a near-term downtrend. Right? A channel to the downside. So just keep that on your radar. And again, as we punch, if it just decides to go sideways through, again, obviously we've lost trend, but it is a descending channel right now. And again, Powell, he's a dude that can move this one in particular. I would say actually that Powell probably has more of an ability to move gold than say Buffett does, and the president does. Because again, the Fed is the one that controls monetary policy and rates and things like that. The president doesn't control rates. Buffett doesn't control rates. Powell can control rates, and rates is directly associated with inflation, controlling inflation, and that would be gold. All right, so purely technical, I'd be bearish this one, looking to get short this, today. I'd like to hear Powell speak first. Again, hopefully he doesn't ruin the downside to us. But again, a pop into 1964 short, a pop down, a break below 1906 would be short as well. Would not be interested in taking this one long. And again, wasn't interested in the long yesterday. It went away, but again, if you don't get in the trade, there's no risk on the market. Powell has the ability. He has the ability. I'm telling you, gold is, it's a family rated station, but man, he owns gold. He's the one guy that can really move gold. Silver. So silver did pop, and we mentioned yesterday that 27.41 was an area where we'd be willing to get short. We had kind of two shorts, and we said, hey, listen, if we can break below and break 25.64, look for, again, that retracement below, right? The Harry Potter below, up, and then take the short. Or if we can get up to 27.41. And that's what we hit. We hit 27.41. We pulled all the way back down to 26.90. So again, 50-cent drop in silver, not too bad. And it went exactly to where it should have, right? It went exactly to where it should have. Based off of the way that it based here, that's absolutely where you guys should have taken your profit. Without a doubt. Again, it even tagged the very, very top of it. In that short, that was it. That was the target. It has hit it again and pushed lower. For this one, I would say now, for another short, I probably would not use 27.41. We're a bit too close to it for somebody as powerful as Powell. I think if you want to get short this position and have it coincide with gold, I really think you need to wait for like the 28.12 range. I think that would be a better area to take shorts off of. There's a zone here in the middle. I don't necessarily love this one. It was tested here on this candle and gave us a nice reaction, but it really started back here. I think we need to go a little bit higher, and I think that coincides with, again, the Powell speech and kind of, where it needs to go. But again, this is what we talked about yesterday, the 27.41. There's your hit. There's your drop. Again, perfect place to take profit. It's exactly where you should have taken profit in it. Now, if we can get a break below that, again, I do think we will get back into this lower range. But kind of just like gold, again, if we can get a break below, I'd love to take it. I'd love for Powell to talk about how inflation is not an issue, and again, bring this back down and really retrace this all the way back down to the origin of the move yesterday. All right. But again, there was your play early morning for silver. Now, let me bring our favorite commodity across. Let's go grab some oil. Where is it? Trading view, oil right here. And oil is negative, down 0.49%. All right, so here's the setup from yesterday. So what did we mention? We said, hey, listen, we're right around this level here. We'd like it to punch higher. We'd like it to break that 43.55, and we'd be willing to get short. Well, that's exactly what it did, okay? It did go just a little bit higher, and remember, that dark line is actually part of this greater zone here. This was the red was the aggressive entry, but that's where we were looking for it to pull into. And again, that's where we're looking to play reversal. Remember, I'm not a futures trader for oil. I like it better in Nadex, in which case this wouldn't have made any difference in the world. But as you can see, we've pulled back down now. Yes, no ads. We've pulled back down right into that kind of, 42.98 range. Right now, we're back up to the 42.22. This is a turning point. And again, you have to respect it. It did go a bit lower. Welcome, Bull. Welcome, Bay Street Bull. This is kind of the same thing. It's the same scenario. I don't think we've had really overall too much movement. We've been banging off this supply zone. Again, remember I said any targets to the downside, we needed to make sure we were out before 42 or 40, either of these two. But again, this is a level we wanted to watch out for. All we did is we kind of came down in the middle. We popped up. We grabbed more of those sell orders, and we pushed lower. So, I think Powell will have some control over today. Again, him talking about the demand not being there or recovery and things like that. I don't think that there's much, unless he mentions oil production specifically. I just don't see many cases that will really jack this through the roof. I just don't see much there, right? Like I said, the levels we have above here, I think, are great levels, to that area. I think we're doomed to stay kind of in the same, the same area again. I'd like to see price come down to this 42.50 today. I think that's a decent level to kind of drop down to. Again, on any type of if he says anything that we burst up into that same, 43.55 to 43.71 range, I think there's another viable short in there. I know some of the people on the channel, you guys are not necessarily familiar with Nadex. It's a way to kind of play things like oil without taking too much risk, without low risk, and it takes advantage of options. That's how I'd play it. If we can get back up into there, especially on a PAL and some type of PAL message. Take something out of the money. Take like $15 risk. Take it off at $50 profit. Is probably the way to play that one. Again, that's it's not bad movement, right? Yesterday it dropped what 50 cents. Jackson Hole will probably mention oil, and don't forget too. A lot of this spike. Let me see. Hold on. I don't know if you guys ever look at this, but anytime there is this is an interesting season. Let's see. Live updates, Lash with high winds. Let's see. I don't want the New York Times. I kind of wanted the weather here. Here, let me pull this one up. This is on Twitter. I don't really want it on Twitter. Let me see here. Let's see. It's just hurricane. It's East Coast, Atlantic. Let's see. It doesn't look like it's So what I'm doing right now, guys, and again, this is one of those things. This time of year, we have hurricanes, things like that. So one thing that will affect oil is, again, Laura's now extremely dangerous Category 4 hurricane with maximum winds. This has the ability to affect oil production, and refineries, particularly in the Gulf. I haven't heard anything yet about it affecting production. And again, we do have a lot of supply right now, but things like this in this season are definitely important to kind of focus on. Again, a lot of this looks like it is right, this is 19 hours ago. Yeah, 19 hours ago. Seeing where this is kind of a big deal. 5 hours ago, it makes landfall in Louisiana. So it's, again, 15 minutes ago. So it's here. We should probably hear more about it today. But again, that may actually give us an artificial kind of little bit of a pop in this. The fact that we have a hurricane, Category 4 smashing the Gulf, and this is not able to punch higher, means that we're not seeing kind of the damage and the destruction that we typically would see. So, if it rotates back and all of a sudden oil refineries are being shut down, again, something just to keep focus on. But if that was the pop that we had for a Category 4 hurricane smashing through the Gulf, I would have to say I'm still bearish this position. I want to be bearish oil. All right. But again, we will hear more about it later on today from Powell. As I said, for those of you that are just jumping in, don't know if you guys watch this or not, but again, Fed Chair Powell he starts speaking in 10 minutes. Okay. It doesn't say what he's speaking about, but again, monetary policy framework review. Yeah. So what he says isn't going to matter as much as this right here. The audience questions. Decipher, and here we go. Look. Yeah, decipher interest rate clues. So here's your gold play, guys. Here's your gold play. So again, it looks like, talking about the monetary policy framework is not going to affect oil as much today. It looks like this will be purely kind of an interest rate discussion is what people are going to be looking at. And again, monetary policy, when they say monetary policy, they're talking about lending, interest rates, buybacks, those kinds of things to stabilize the economy. It's really hard to say right now that we need to stabilize the economy with, again, GDP being better than expected helps, right? With some, you can say, oh, but GDP is low. But it's like, yeah, but, again, people associate the stock market to the economy. And, that's at all-time highs. So we'll see what Powell says. Like I said, I don't think he's going to slow us down too much for today. All right. So with that being said, overall, guys, like I said, bearish oil more than anything else, especially the Category 4 hurricane, and the price of oil is really coming down. Doesn't bode well, particularly with supply. It will probably affect us a little bit next Wednesday when we get the backlashes of, what the supply disruption was, and that could be kind of interesting to play. So, all right. CRM analysis, sure, I can look at CRM. All right, so I'm going to pull this up real quick, guys, before I jump over to CRM. Remember, we have a contest in the channel. What you do is you can apply. Everybody can get into the giveaway. Just do !ticket to get a ticket. Everybody gets one free. So if you've been here 30 seconds, you have a free ticket, just like all the people that have been watching. It gets you in. Carl was a winner yesterday. Carl's not here today, so it looks like we won't have a double winner. What you can do with Pip Chips is you can actually purchase mentoring sessions. We do one-on-one over Zoom. We can break down anything that you want, stocks, forex, futures, currencies, whatever. And we'll do the analysis together, and or we can talk about your strategy, my strategy, whatever you want. All right, so I'll give you guys about another 2 minutes for that one. During that time, I will typically pull up some stock trades for people. So it looks like Wealth Builder wants to see CRM. So let's do CRM, Salesforce, good old Salesforce. So Salesforce obviously has a big pop right now over the last, 2 days in after hours. Let's see. And again, a lot of that is because of what? Earnings. Right? So Salesforce had good earnings. So trying to see if we have... No. So it looks like we don't have anything on the top side to really focus on this one. But I would say one thing, right? So with Salesforce popping in again because of earnings here up 2 days in a row, if the market starts to turn, I would have to say, if anything at this point, I'd be a bit cautious to the downside. Why? Because again, earnings are great. Wow, it skyrockets forward. Everybody knows that it did, and everybody sees this that it's going to be such a great company, and that tends to be where you have those reversal plays coming in. I would say that on the lower level, we do see somewhat of a minor top in here as well. And again, I think Salesforce is kind of primed for where it is right now. I think it is in a good position with things being so remote. Again, it's a tech company, so it will technically do better than most other kind of standard traditional, forms of things. Kind of like the payroll companies, right? I think payroll companies also fall into the same kind of scenario that Salesforce does, just because of the environment being fully tech based, not needing, the fact that it can be done completely remote, I think, is good. Now, earnings were great, but the thing is, will they continue the same earnings forward? And that's kind of where I have a little bit of worry. Again, Salesforce is not cheap. They're kind of the big boy on the market. I think they've done well. And again, you can see, if I bring this back to a daily or an hourly, you can see that for the most part, it's kind of been rallying. But look back here, and what happened right here? This is February when the coronavirus kicked in, right? Everything got drugged down. And again, we bottomed around March, and people were like, oh, we need to stay at home. Okay. And that's where Salesforce really started to rally back up again. We know that it has exposure to the coronavirus, right? Here's when the market dropped. Salesforce also dropped about what? From 195 on February 20th to 4 weeks later, it dropped $80. So that's quite a large hit. Okay. So we know that it has exposure. Being the fact that it jumped this high, we went from here up there, I would have to say, I may be more willing to look for some type of a short position. And again, this could be one of those scenarios like we mentioned yesterday. Not that many people are going to buy 100 shares of Salesforce. That get a little expensive there, but it doesn't mean that you can't. But I would say that, again, any type of turn in the market, any type of signal that we were at a market top, Salesforce would be something that I'd be interested in getting short. And again, play it smart, right? You don't have to get risky with it, but trade this with put spreads. You can get those pretty cheap at this level. And again, you can, put a week duration, maybe even a little bit longer duration on them. Because again, if we do have phase 2, if things start cutting back down again, earnings are great if you can maintain them. But is anybody more going to maintain if the economy is going to be put into a recession? And my opinion on this would be probably no. When you can jump this much because of earnings, that's typically a time to start getting short, as people are like, well, can you continue to have those earnings at the same pace? No? Okay, then it needs to come back down. All right. What else we got? It's in the Dow now. Yeah, but that doesn't mean anything if it's in the Dow. So what? Just being, it doesn't protect you too much, right? Remember, what drives stock prices? Okay? Retail traders. If everybody wants it, it's great. If you don't want it, it's not great, right? It's wonderful that they're in the Dow, but does that really change the fundamental values of the company? And the answer is no, not really. It doesn't protect you. Just because if you're a Dow company, it's not like you can say, hey, we're protected now because we're in the Dow. No, you still have to deliver on earnings. You still have to deliver on new sales. You still have R&D. You still have to go into other platforms. Remember, if you're the big boy, which Salesforce is, all you do is have less expensive tech companies chomping at the bit to replace you. And again, that starts to erode away as well because you have to constantly change. That's what tech is about, always about advancing forward. I would say I'm probably more bearish Salesforce than anything else. All right, so with that said, I will go ahead and pull the closing. We're going to close the giveaway right now. We'll go ahead and do the drawing. The winner of today, let's see, is Carl in. I don't see Carl in here, but if we click the winner is Savage Moxie. Look at that. Last one. Savage, be the last one in. Look at this. The man jumps in, or Savage, if you're a woman, I apologize, but you jumped in, snagged it at the last minute. Look at that. Awesome. So I will go ahead and give you your 25 pip chips. You're going to probably be lower on the list, so I'm going to have to go in there and do a little searching and find what number you are. But I will give you congratulations. Make sure you follow the channel. Stop back in tomorrow again. Pip chips accumulate pretty quick in this channel. It doesn't take much. I can show you the leaderboard. It doesn't take much to get up here in the upper reaches of it. All right. And again, these guys can do Will can almost do 4 mentoring sessions. Debbie's at 3, almost 4. Ernest is at 3. Marina is almost at 3. You know, Q is at 2. Wealth Builder's at 2. Commander Root. We haven't seen Commander for a while. I'm not sure what he's doing. And James has been sleeping late, getting these things through. But it only costs 500 pip chips. So it looks like right now, from basically 11 up, all these people have mentoring sessions that they're able to, kind of take over. So, but you do get them pretty quickly. All right. So, with that said, Debbie failed. I know Debbie tried to get in right at the last little bit, and Moxie stole it from him. But I love that. I love when the new people win the contests. All right, so guys, again, remember, in about 3 minutes, Pal's going to start speaking. Watch your positions. Make sure you protect. You're going to start seeing some movement here in crazy ways, right? You're going to start seeing some. Look at this. This one's already up to 103 right here, inside of the pound dollar. Let's see what type of movement. Look at this. Already jumping because Pal is speaking, and he hasn't even started yet. Right? People are getting prepped, ready to go for this one. All right. Talking about the dollar. Look, already moving, and he's not even up on stage yet. Yep. And again, that's how big Pal is. So look for your retracements, protect your positions, look at the volatility bounce back and forth. Look at this. Look at the spike on this one. You're talking about a 20 pip spike on a 5 minute. There's your 5 minute candle, right? This is what Pal can do, guys. A 50 pip candle in 5 minutes. The ATR is 12. In the 5 minute, and that's because of look at this. Welcome to Fed Pal speaking. All right. So with that said, guys, you guys have a good trading day. Again, wait for the market to stabilize. Look for it to turn. Look for some signals. This is all the pre-market stuff. Again, spreads are going to be jacked. Again, by probably 9:30, we will be we'll have entries into this, into positions. All right. So you guys take care. I will catch you tomorrow, 8 to 9 a.m. Eastern time, and have a good trading day. Take care.